Welcome to the Microcap Brief. Over our past episodes, we have built a complete toolkit for identifying risk. You've learned how to spot the dangers of dilution, how to decode a NASDAQ delisting notice, and how to heed the critical warning of a going concern opinion. Today, we're going to assemble those tools into a powerful, step-by-step screening process. This is a disciplined framework for filtering through the thousands of microcap stocks to find the rare gems. Before we begin, it is critical to state that this is for educational purposes only and is not investment advice. This is a framework for research and due diligence, not a recommendation to buy or sell any security. Every investor must perform their own thorough research and consult with a qualified financial advisor. Now, let's open the playbook. Here is a 5-step screening process for identifying high-potential microcap companies. Step 1. The Liquidity Screen. This is the first non-negotiable gate. Before looking at anything else, a screen for a minimum level of trading volume and market capitalization is essential. Why? To avoid the liquidity trap we've discussed. A company might have a great story, but if you can't buy or sell the stock without dramatically moving the price, it's uninvestable. The goal is to find companies with a consistent daily trading volume that shows a real market exists for the shares. This simple screen eliminates the vast majority of microcaps and is the first line of defense against getting stuck in a stock you can't exit. Step 2. The Survival Check. Once a company passes the liquidity screen, the next step takes less than 60 seconds. Go straight to the company's latest quarterly report, the 10Q, and look at 3 things: cash, debt, and cash burn. How much cash do they have on the balance sheet? How much debt is coming due in the next year? And most importantly, what is their quarterly cash burn rate? This simple calculation reveals their financial runway, how many months they have left before they run out of money. This is also where you do a quick search for the words going concern. If the auditor has issued that warning, the company goes straight into the too hard pile. This 60-second survival check eliminates another 80% of the remaining companies. Step 3. The Dilution Detective. Now that you have a small list of companies that are liquid and not in immediate danger of bankruptcy, it's time to become a dilution detective. This is where you investigate the company's history with shareholder value. Check the company's press releases and filings. Have they done multiple reverse stock splits in the past? This is a massive red flag. Do their financing deals, detailed in the 8K filings, come with a huge number of warrants attached? This signals a deal sweetener that can lead to a massive future overhang. The goal is to find a management team that has shown discipline in how they raise capital, not one that has a history of toxic financing that has destroyed shareholder value. Step 4. The Insider Check. Only now do you look at the people. Who is flying the ship? Go to the SEC's EDGAR database and pull up the Form 4 filings for the last 6 to 12 months. This tells you if corporate insiders, the CEO, the CFO, the directors, are buying or selling their own company stock with their own money. A pattern of consistent insider selling is a major red flag, but a pattern of open market buying can be a powerful signal of confidence. It's also critical to look at the management team's track record. Have they successfully built or turned around a company before? Step 5. The Catalyst and the Story. Notice that only after a company has passed all 4 of these rigorous numbers-based checks should you allow yourself to look at the story. This is the final and most important filter. Why should you believe this company's future will be different from its past? You're looking for a credible, tangible catalyst. Is there a new game-changing product? Is there a new proven management team that just took over? Is the company in the early stages of a major turnaround like the Phoenix Interactive case study we examined? The story must be backed by a credible plan and ideally early signs of execution. Your key takeaway is this: a disciplined, step-by-step process is your single greatest defense in the microcap market. By focusing first on liquidity, survival, dilution, and insiders, you filter out the vast majority of low-quality companies before you ever get emotionally attached to a good story. Thank you for listening to the Microcap Brief. This is the process. Now go do your homework.